Both beginners and advanced traders actually use the market to be able to analyze what the market is doing. Now, if you're a beginner or you're an advanced trader, you cannot do without market structure, because market structure is so important that it tells you when to get involved in the chart and when not to get involved in the chart. Now, if you're new to this channel and this is the first time of watching this video, I would like you to subscribe and also hit the comment section below and leave a comment in case you have a question. Now, if you're also new, you can also like this video and share with your friends also. Now, market structure is so important in the life of every forex trader, because why? It tells you what to do and what not to do. Now, first of all, before we begin to analyze the market and get to understand what advanced traders do in the market, let's get to understand what market is. Market is actually the meeting point between buyers and sellers. Now, in this case, we are not exchanging goods. We're actually exchanging what the bid price and the ask price, telling us when to get involved in the chart. This is the market asking you, do you wish to sell at this zone or at this price, or would you wish to actually buy at this price? Now, you need to understand something. If you're not confident with it, I always tell folks that, guy, if you're not cool with the price, it is better you get involved and just get out of the chart, and it is safer that way than for you trying to force yourself to trade, because why? You're not confident with the price the market is giving you. You have the right and every right to say, I'm cool with this price, I'm not cool with this price. It's up to you as a trader. Now, another thing is a structure. What's a structure? Structure is an arrangement or a planned pattern. Yeah, the market has the way it moves, and every market doesn't move the same way. Now, your ability to stick to one market and understand how the market really moves gives you an advantage. You know what you're doing. Now you're going to be moving on to understanding that. I need to understand something. If you're yet to watch the video where I talked about advanced market structure part 1, I would like you to click on the link. I'm going to be leaving the description below for you to get access to it, so you can be able to get involved and know what the market structure is from the beginning, for us to move down to this part 2 of this video. Now I'm going to be using smart money concept. Now, smart money is the big banks, how they trade. I'm going to be unveiling some of the secrets in this video for you to get involved and know what to do. Now, how to identify price flow. The first thing you need to do to identify price flow is understand the swing points. Now, what are the swing points? The swing points are the most significant ones. The most significant ones. While using the swing point, you want to make sure the market, you're using the analysis from the higher time frame, because if you're using the lower time frame, there are chances that you're going to be losing money all around. I did that as a beginner. There was one secret I found out about the market. The market is all about the top down analysis. I did a video about it some time ago. It's all about the top down analysis, whereby you do analysis from the higher time frame and you go down to the lower time frame to look for entry. Guys, let me say this again. See, the market is based off of the higher time frame down to the lower time frame. You don't want to be doing analysis in the lower time frame. You're going to be losing money. All you want to be doing is understand what the market is doing in the higher time frame, and you gain an advantage. Now, for us to understand what the smart money concept is, I talked about the major swing points, and let me identify them, like this trend line here. Okay, this is a major swing point. That's one. Is another major swing point. Now, why am I calling this swing point? If you check very well, we have some little moves in between these points before the market came back to this trend line. Now, the reason I'm using this major swing point, this to tell you that this is smart money guys. These are smart money guys. Now, they always want to buy before they sell. That's their secret. Whenever the smart money want to get involved in the chart, the first thing they do is that they make sure they actually sweep out retail traders out from the market. So you guys, you don't want to become a retail trader, because you're going to be losing often. Most of your trades are going to be going against you, because why? The thing I need you to understand is, it's really not your fault, but you need to follow what the big banks are doing for you to be able to become profitable, except you want to be struggling over time. But if you want to be profitable, you need to follow what the big smart money guys are doing in the market for you to gain an edge in that market. Another thing you need to understand is that you need to be able to identify major order blocks. Yeah, institutional order blocks. This is an order block. Now, first of all, let's understand what an order block is. An order block actually is actually an area in the market. I'll call it an area where pending orders are. Now, where you see buy limits, sell stops, and all of that, and you also see stops. SLs are also there. That is an order block. Now, the market comes to that zone. It stops traders out and activates other trades that are pending. Okay, that's an order block. So you want to identify those major order blocks in the market for you to what gain an edge. Now I call this an order block clearly because why? The market actually came to that zone and pull back. Now there's one thing I want you to understand. Another thing that smart money guys uses in advanced trading concept is institutional candles. Institutional candles are the last candle that ran out the move to the upside or the last candle that ran out the move to the downside. Now in this scenario, as you can see here, this market is actually bearish because why? As you see our trend line, the market has been pulling back. Now in case you don't understand what pullbacks are zone where the market was pull back and retraces back to correct entries and give entry triggers to traders to get involved and still ride them to the downside. Those are what entry triggers for the market, for smart money guys to be able to enter. In case you miss the first move, you can get involved. I'm calling it smart money guys because what I'm trading here, what I'm teaching here is not for retail traders, it's for smart money guys. But in case you're trading a retail trading where you get stopped at most of the time, it could be that you are trading against what? The market. You're trading. Well, one thing I do is whenever I want to get involved in the chart, the first thing I ask myself is smart money guys here. How do I identify them? They always come out to run out positions. Now let me show you something here. Let me show you something here. If you check closely, you'll see something in this zone here. See, there were some folks that were selling here, but smart money guys actually came up here to this zone and stopped them out. This was an entry. This was an entry to what? To ride the market to the downside. There another zone here I see here is this. Some folks were here actually selling earlier on, but smart money guys came and what stopped them out again. Now, how do you identify markets? Smart money guys, you identify them through drawdowns. This is smart money. I told you before now that they actually sell before they buy. They actually sell before they buy, or they buy before they sell. This is smart money. This drawdown that you saw here was actually done by what? Smart money guys. Now, I talked about institutional candle. Institutional candle are the last candle that would run out price to the upside or to the downside. Now, there was money here. We have some folks that were actually selling here. Some folks were actually selling here. Here. Now, and probably their stop losses will be above this zone where I drew. So what the smart money guys do, they took out this price to the upside. Now, if you look closely well, it took out price to the upside, and if you check very well, this was the last candle they actually what ran out price to the upside. That was the last candle that ran out price to the upside. Now I want you to take closely look at this. If you look very well, you see that this candle actually here, there's an order block. I will show you the order block now. The order block is here. It's actually here. This is the order block. So what happened now? Price actually gave us this as an order block, but check out what happened here. There was nothing like an order block respected at this zone here. Now it means that smart money guys are actually keeping a pending position here to take out the liquidity from the downside, but they are not going to be what? They did not take out the liquidity from the upper side. They're going to be coming back to mitigate their positions. They're going to be coming back to mitigate their positions. Now, what this tells me is, if I'm looking for potential entry here after this break to buy, I should be looking for an opportunity for me to what? Sell equal, because why? The market is still bearish. What we see here, all these things we see here, all this move we see here is actually a retracement move. Let me draw this trend line. All what we saw here is actually a retracement move. Now, as you can see, we know that the market is bearish. Now, see what happened here. They actually came back to close their mitigated position. Let me take this a little bit closer. They actually came back to what? Mitigate their positions here and give an entry to the downside. Now, there was a time I was a beginner when I was doing something crazy. When I see market moving like this, I would just come and say, whoa, this market is actually bullish, so I should be looking for opportunity. So when it is retracing, I will be looking for opportunity to get involved. This is a weekly time frame I'm using to do this analysis here. So what I was doing was, I was always after a zone whereby I will look for opportunity to buy rather than understand what the big picture is saying. Now let me tell you what this means. This whole move here was just to take out the liquidity that was here. Yeah, they took out all the liquidity that was here. All the liquidity that was here, and the market what continued to the downside. It's a smart money concept. So if you're able to understand what this concept is all about, you will become profitable in the long run, because why? You know what the big picture is saying. One. The second one, you're trading with the smart money guys, and I bet you guys, you cannot trade with the smart money guys and lose a lot. You're going to be profitable, because why? You know what they're doing. Now, coming into this chart, and I saw this stuff here, I knew that whoa, smart money are in this trade, because why? They actually have closed their position. So the market, we expect it to what? To ride still to the downside, more lower to the downside, more lower to the downside. Another thing that happened here was this. I told you smart money guys, they actually run out liquidity. See what happened here. This is smart money concept. They actually pull back to this zone. They actually pull back to this zone here. Now this retracement move now was just to what? Confirm that this is smart money guys. I told you they have the major swing point, and this right here is a major swing point. Though it's a retracement move, but we know it to be what? Major swing point. Is a major swing point. Yeah. So what they did was what? After coming back down, they retraced back to that major swing point, which indicate that this support zone now has actually become what? A resistance for smart money guys to take the market to the downside. Now you ask yourself, why didn't they actually come back to this zone? They didn't come back to that zone because why? This is a concept, and this tells you that they are in the market. They are the big players. So for you to be profitable, you need to be able to work with the big players. They are the ones that knows what they're doing. So all other traders are retail traders that trade off of what they are doing in the market, and that gives you a higher win rate. Now let's take it down to the lower time frame and see the H1, D1, and see what they are doing. Okay. So coming into the zone here, there was something we need to understand here, that this market is still bearish. It's still bearish because why? We understand that the higher time frame is actually doing the move. So all what we want to do is look for analysis. See, all what we want to do is look for opportunity here to get involved in the chart. In either take price, this retracement has happened. So all what we want to do is stay bearish. Now, if you're buying off of this zone here, you're doing it because why? You knew that the market is actually doing a retracement move. Not that you come into the market and think that, hey, this market is bullish. It's not. It's actually a retracement move. It's actually a retracement move. And like we could see in the market in the higher time frame. I like staying in weekly and daily because it gives me rest of mind. And let me quickly say this. if you do your analysis based off of the higher time frame, you are profitable in the long run, and you always have a peace of mind, and you get to understand something, that you are never late. Now, somebody was saying, guys, Sammy, what do you think? Is there an early time of getting involved in the chat? I say, well, it all depends on you. All depends on your structure. If you understand what the market is saying, you will relax, because for this weekly time zone, it takes 1 week for a candle to be formed. So I wonder why the rush is. If you miss an entry this week, you definitely get an entry next week. So it's not a fanfare. But for me, a day trader, I prefer going to the market daily to check what the market is doing. So for you to become profitable, you need to understand what the smart money guys are doing. I didn't talk about higher highs and higher lows, because why? I talked about it earlier on in this video, and this video is not meant for that. It's meant for advanced traders to understand what the market is doing.